start from the weekly time frame. Why would I do that? Because like now when I say the weekly, I don't care about all of this. I don't care if the weekly is creating lower highs or lower lows. I don't care because I'm not a swing trader, right? I don't want a projection for the next couple of years or anything. Like price might never get into these areas. Who knows? Who knows? Okay, might never get there. All I want to see is the current price action on the weekly. Okay, like I'm not even gonna zoom out like this. Okay, no, this is all I want to see. This is all I want to see. Now let me show you very clear examples. Okay, let me show you how to use all of the concepts that I taught you right now. So let's say we were here. Okay, now let's say we were here. First thing, what do I want to see on the weekly time frame? I want to see what my major bias is. So on the weekly, my major breakout structure is still a bearish one, right? See that? It is still a a bearish break of structure. So which means the weekly is still bearish, right? Simple. The weekly is still bearish because the major break of structure was a bearish one. And then what do I want to see? Where are we currently at? We are inside of a weekly supply or is a weekly order block. See that? We are inside of that. So what can I expect the next week? We can expect sells until at least this imbalance get filled. See that? This is all I want to see because if you get a bias for one single weekly candle, just one candle, you have a bias for the whole week. See that? You have a bias for the whole week. Okay, so next week we can expect until, yeah, we can expect a sell at least until this imbalance get filled, right? Because it's coming from a higher time frame point of interest. Now, this is all I want to see. This is all I want to see. Okay, this is all I want to see on the weekly. Then go to a daily. Then I go to the daily, and on the daily, what am I going to do? I'm going to mark out my trade-in range. Okay, the trade-in range on the daily. I'm going to mark out the trade-in range on the daily. Now, yeah, I'll delete this for a while, but keep in mind that this was a weekly point of interest. Okay, a weekly point of interest. Now, on the daily, what am I going to do? I'm going to mark out my strong high. So here it is. It is a strong high. Why? Took out all of this liquidity, and yeah, that's a bearish QM. See this? A bearish QM. Okay, a bearish QM. So price has taken out all of that liquidity, and it has, yeah, a minor structure was broken here. Right here was where the minor structure got broken, and here we have the major structure broken. See that? The major structure was broken here. So this is a bearish QM, right? A strong high, never tested yet. Mark that out. Now, how do we know the strong high has created a weak low? What do we want to see? A bullish QM, right? A bullish QM. So here we have that. So here we have the break right here. Right here is where we got the break. Now, this is not a breakout structure. Okay, why? Because did this create a lower low? No, right? Never created a lower low. Okay, so that cannot be taken as the break. This is where price broke structure. So we can use this as the high and this as the low. Okay, is it clear? Is it clear? Okay, because yeah, the chart work must be clear. Okay, so I'll try to make it as simple as possible. So this is my trading range from here to here. Okay, so this we have this break, and if we look for discount and premium prices, where are we currently at? Premium price, right? Inside of a premium price, and we are inside of a daily point of interest, inside of a daily strong high. See that? Inside of a daily strong high, inside of a premium price, inside of a weekly bearish order block, which means it has a huge potential to the downside, right? We can expect sales now. Okay, we can expect sales this week. Okay, we can expect sales this week. Then I'll go to the 4 hour. I have all of this marked. Yeah, so let me mark this out properly. Okay. We have a strong high here. Another one here. Okay, like this. All right, so we have all of these areas marked. Now what do I want to see on the daily? Okay, what am I gonna do on the daily? Yeah, this is the 4 hour. What am I gonna do on the 4 hour? Yeah, what's that? Yeah, this is the 4 hour. Okay, so on the 4 hour, what I'm going to do is I'm going to mark out my obstacles. Okay. Now, what do I mean by obstacles? Okay. You know what obstacles are, right? Like the things that are like blocking the way. Okay. Now, if I'm taking a cell here, it will not directly fall here. It will obviously pull back up. It will pull back up. Okay. So I'm going to mark out the zones where I can expect pullbacks from. Now, where will the pullbacks come from? From unmitigated strong lows. See that? From the unmitigated strong lows, that is where the pullbacks will come from. Okay, that is where the pullbacks will come from. So first of all, let me talk about this low right here. Now this was a strong high, right? Why was it strong? It took out liquidity and it has broken structure.
Yes.
See that? So that is a strong high, a bearish QM.
Yes.
See that? That's a bearish QM. So then what happened? Look how hard they tried to break above that the bearish QM. Now, this is my point of interest, okay? Because see, these were the consecutive up candles that took out this liquidity. This did nothing. These were the candles. See that? Okay, so your focus must go into the candles that took out the liquidity. Okay, because if it's an order block, it has to make sense, right? It has to make sense. So this is the order block I'm looking at. This is the point of interest. See how hard they tried. Okay, they like for days and days they were trying hard to break out of that. Yeah, see, took them 10 days to break above that strong high, but eventually they broke out of that, right? They broke out of the strong high. So to break out of this strong high, where did the low originate from? It's here, right? So if this low broke above this high, this is a strong low, right? That's a strong low, and it has never been tested yet. Okay, never been tested yet. So mark that order block out. None of these, I'm not looking at this, I'm looking at this, the last push down before the push up.
Okay.
Mark that out. Okay, so we have one area marked out. Okay, and then let's see another area. So we have a strong low here, right? We have a strong low here. Why? Took out liquidity. Okay, it has taken out liquidity and it has broken structure. And now what do we want to see? Now this is a what's that? A bullish QM, right? That's a bullish QM. So what do we want to see? From the time that the bullish QM is created, we want to see a bearish QM, right? That is what we want to see. That is what we want to see. Like, yeah. Now look at this. All of the lows were protected, swing lows, swing lows, swing lows, until here it was broken. Now, if you use a line chart, you can see it properly. See that? Ignore the wicks. Ignore the wicks. See that? Can you see that? Here we have a bearish QM, a very clear bearish QM. See that? A very, very clear bearish QM. Okay, so which means this is a strong low, right? This is a strong low and it has not been tested yet. It has not been tested yet. So this area, we can expect a pullback. Okay, we can expect a pullback from this area. Okay, so now where can we expect the pullback from? Now, I don't care about this order block. What is the candle that took this liquidity out? What's the candle? It's this, right? See that? This was the candle that took the liquidity out. So mark that
That
out.
candle got
See that?
mitigated, right?
I'm sorry?
But that candle got mitigated.
This thing right here, not yet. Okay, this cannot be counted as a proper mitigation. It has to, like, after creating, now this is what we want to see. This is the strong low, right? Now don't look at the candle, don't look at the don't do not look at the candle. Is this bullish QM mitigated? No,
No,
right?
no, no, no.
Is this bullish QM mitigated? That's what you want to see.
We are looking it as
Is
a
it
whole,
mitigated?
right?
I'm sorry.
We are looking it as a whole. The Quasimodo is a
Yeah,
whole.
as a whole. Exactly.
Okay.
We're going to look at that whole thing as a whole. You know,
As you're
we're
considering
not going to
only
look
the
at this.
candle.
Okay. Yeah, we're not going to look at focus on this candle. We're going to look at the whole Quasimodo.
Okay,
Okay,
got it.
we're going to look at the whole Quasimodo. We're going to focus on the strong low. Okay, the strong low that has not been tested yet. But why is that strong low? Yeah, what is the most significant part of that strong low? It's this candle, right? The candle that took out the liquidity. So that is the reason why we are looking at that. Okay, so we have that. And one more area we have, and it is already testing that. See this? Stop hunt and a break of structure. Okay, so this could be used as an inducement into this area. See, this was the doji that took the liquidity out. Okay, so yeah. think it tapped into that, never came into the body though. Yeah, it came very close. But yeah, now look at this. Can you use this order block? No. Why? Did it take out liquidity? No. Did it take out any liquidity? No.
Yeah.
On this time frame, did it take out any swing low? Not, no, nothing. But it only broke structure. So what did I tell you about a strong low? It has to do a manipulation and then break structure, right? But yeah, did this did break structure, but did it take out liquidity? No. So is it high probable? No. That's it. Okay. So yeah, so we have all of these areas marked. Okay, we have all of these areas marked. Now, when price gets here, what do you want to see? A QM. When price gets here, what do you want to see? A QM. Okay. So if the QMs are is now, yeah, I'm referring to it as a QM, so that's easy for you, right? It's simple, I guess. Okay. So yeah, now when price gets here, if you do not see this, okay, simple, you're not going to take the trade. You're not going to take the trade. Okay. You're going to, like, it will just go. All you have to do is just delete the zone. Like, that's not going to lose money, right? You're not going to lose money with that.
Yeah.
Okay. And yeah, yeah, when price gets here, once again, what do you want to see? That's it. If you do not get that, it will just keep on going. So you're not going to lose money. Okay, so simple. Simple. So you can have these areas marked. Have these areas marked out. Okay, we got them marked out. And then now let's go to a lower time frame. So we have everything marked, range marked, obstacles marked. Even this obstacle, yeah, currently the obstacle is getting played out. Now let's go to a lower time frame. Let's see how we could stack up the entries. Okay, let's see how we could get some trades. Okay, first thing I'll show you about how the trading ranges are playing out. Okay, we have all of this stuff. Yeah, like even this buy, where did it come from? Okay, I hope you saw that. If you mark out the Asian range, like, yeah, I got this buy, that's why I remember this. Asia starts at 2:30, ends at 9:30 IST. Okay, that's Indian Standard Time. This is the Asian range. Okay, where did this move come into? Right into the midline.
Okay.
See that? Right into the midline, and look at the move. Bam, shoots up. So I got my entry from this wick right here. See that? Where did it come
In
into?
this
A
case,
sniper
why
entry,
you
right?
took that wick
A
as a
sniper
target
entry, and it
POI?
goes. See that? Can you understand that about the Asian midline? Okay, very powerful. We had liquidity resting right above that, swept that liquidity, and it shoots up.
Okay.
Okay, and it shoots
I
up.
have one doubt. Why did you took this
Okay,
wick as a POI in this case?
in this week,
This
okay, I
week.
think, yeah, now on FXCM, okay, on FXCM, like, it was very clear. Okay, it was very clear. The midline was lining up right in this area. Okay, right in this area, and you can see that, right? The imbalance was above the 50%. The wick was where the 50% was. See that? So I'm not going to use this. I'm going to use the one that is below that. Simple. Can you understand that? Okay, Asian midline. So the if it taps into the Asian midline, like, if I'm entering off the imbalance, I'll get stopped out, right? Can you see that? If it wants to tap into the imbalance, I'll get stopped out because the midline was right here. See that? Can you understand that? I hope it's clear. Okay, so this is where like, you could have even used this whole area, but I refined it to the wick right here. Can you understand that? Yeah.
Yeah.
Okay, because if it wants to tap into the midline, if you entered off the imbalance, you're getting stopped out. Okay, so it's always better to use it this way there. Okay, see now, see how things are different, right? In that previous example, somewhere around here, I told you we're going to use the imbalance. Okay, we're going to use the imbalance. Okay, but yeah, in here, why are we using this? Oh shit, I have to refresh this. Why are we using this? Because the Asian midline was right below that. Okay, so there are chances of us getting stopped out if we use that thing. Can you understand that? Okay, I hope it's clear.
Yeah.
Yeah. Okay, so then what happened? Now we are inside of the daily point of interest. What did price do? Took out liquidity, broke structure. We have a QM, right? Inside of the daily point of interest. Okay, so we can mark out that strong high. Let's use some different color, maybe. Yeah. Okay, we can mark out that strong high. Now, how do we know this strong high has created a weak low? First thing, it has to break below this. Okay, done. And then you have to get a break of a swing high, right? You have to get a break of a swing high. So not this, this. Can you see that? Like if you use the line chart,
Okay.
here we
This
have the QM. Yeah, here we have the QM. Not this, not this, it's this.
yeah.
See that? The QM. Okay, so we have a break of a swing high right here. So your trading range is from here to here. Okay, so now you know what to do. Now you know what to do. Discount and premium. Okay, let's mark out the trading range first, like this. Okay, now look at all of this. All of these were tradable too. Okay, because why? We had this top hunt, we had this breakout structure. Okay, then what's the high? This becomes your trading range, right? This becomes your strong high. Now I'm talking about this intermediate term structure. Okay, I'm talking about the intermediate term structure. How do we know this strong high? Now this is a bearish QM. How do we know this strong high has created a weak low? Here we have the break. See that? Created a low below and we broke. So this becomes your trading range from this bearish QM to the bullish QM, like this. Why is price going up? Take out the internal range liquidity. See that? The last high with the internal range liquidity. Took that out. You could have looked for some sell from these areas. And where are you targeting? Weak low. Look how quick the move is. Right into targets. Can you understand that? Right into the
But
targets.
in this
Okay.
case,
Yeah. Yeah.
where do we have a POA?
In here, yeah,
Yeah.
maybe on a higher time frame. Let's
There's
see.
a huge imbalance, and we swept the
Here it is.
liquidity. Yeah.
Here it is.
Okay.
See that? The body of the candle. You
Yes.
can use it that way. Okay, so that's the thing. Use all the time frames. Okay,
Okay.
mainly use the higher time frame POIs, because that is why ICT always says higher time frame PD arrays. What are PD arrays? Premium and discount areas. Okay, premium and discount points of interest. That is a PD array. Okay, higher time frame one. See that? Right into the body of the candle, and here comes the drop. Very simple. See that? Very simple, but you can't even see that on a lower time frame.
Yeah.
What is there on a lower time frame? Nothing. Nothing. See that? But
Yes.
if you go to the higher time frame, everything makes sense. That's why I always ask you to stick to the higher time frames. Okay, stick to the higher time frames. Like if you go to the M1, you can easily, what's this? Unmitigated wick, lining up with the 4-hour wick. Sell it. Top loss above this high. Sell it. Where does price come into? See that? Very simple. Okay, very, very simple stuff. Like that. You could sell it here. Stop loss above that high. See, obviously, we're not going to do that. One pip. Okay, you can't do that. You can't do that.
Yeah.
Okay, if someone says they're doing that, you're lying. Okay, like I will always have something more than, yeah, something like 2 pips. Where am I targeting? Right here. Where did price come into? Straight into the targets. See that? Straight into the targets. Just like that. Easy. Very, very easy trade. This was the trade in range. Okay. This was the internal range liquidity. Right above that, we had the 4-hour point of interest right here. Refined it to a 1 minute. Like we did not refine it. We had this area marked. We just put our stop loss above a 1 minute point of interest. That's it. See that? We just put our, yeah, okay. See that? Stop loss above this. Where does price come into? Right into that, and it falls. See that? Can you understand that? I hope it's clear. Okay. Simple, right? Okay. And then again, okay, we had one cell right there. Okay. Now, this becomes a strong high, right? Why? Took out liquidity, broke structure. We have a QM. Yeah, we have a QM. Bam. Okay, so then strong high. Now, this is when things get interesting. Okay. Now, can you take this as the trade in range? Here to here to here to here. What's that? Then a breakout structure, right? That's then a breakout structure. Now, what did I tell you at the beginning of the session? This is what I told you, eh? Stop punt, breakout structure, inducement, sell above that. And I told you everyone will be taking this as a breakout structure. I told that you, but I told you it is not a breakout structure. Now, why is this not a breakout structure? Now, I'll tell you why. I told you for us to know that this strong high has created the weak low, it has to create a QM, right? It has to create a QM.